Hello everyone, hope you're doing well. Welcome to another episode of Monday Markets brought to you by the FTX app. We've got Bitcoin, we've got ETH, and that's really it because the markets are still very much correlated with the S&P 500, Nasdaq specifically, and just risk assets, so to speak. While those correlation bots are on, there isn't going to be a whole lot of interesting stuff going on in the majors. So let's go back to the monthly time frame. Bread and butter first and foremost. Not a whole lot going on. As we've discussed, I see no good reason at the moment to trade outside of the monthly time frame. It's just been so good. And as long as that continues to be the case, that will be my guiding light, if you will, within the market. You could make a tentative case that we're reaching the first area of monthly support here, which is this prior lowest close before the bounce. Now that to me is a bit of a tangential level, certainly far less important than the lowest close here, which is the true bottom of the range around 35, 37. But you can make a case for there being some monthly structure here. Going down to the weekly, probably my least favorite time frame out of them all. Is just so messy in this consolidation and chop between 39 and mid 40s was so ugly. I think it's really devoid of any good structure. I really do believe that the monthly and daily timeframes are the best. So if we look at the daily time frame, it shows a nice version of a lot of the price action we've had on the monthly. As you'll recall, one of the main driving forces of the downside, at least, was the failed breakout above this mid 40 level. Market established a clear range, tried to break above it, failed, and then has been moving lower. I still think, given how good monthly levels are, there's still a decent likelihood to trade at the next key monthly level. And we said that it might be here, but really the big one in terms of clear range boundaries is 35 to 37. So that's something to bear in mind when it comes to big picture. As I've said before and as I've said elsewhere, really the best case for crypto is that it either ignites its own medium-term uptrend by reclaiming this 40-odd K level, and maybe there's enough juice to push us from range midpoint to range high, which is to say from mid-40s closer towards 60. That would be a cool move. Or otherwise, decoupling from equities. And again, by that, I don't mean equities keep dumping into the shitter and crypto goes up. I don't think that's terribly likely. What I want to see is some sort of bottom in equities or inflation blow off top in general, or something positive for risk assets as part of the macro landscape. And then I think the likelihood of crypto outpacing traditional markets on the recovery is going to be much higher, right? How that corresponds to price action, without going into scary scenarios, I mean, obviously we will, but the more benign version is some sort of low volatility capitulation above into around 30K, as we've discussed before, where essentially that floor holds, but it's agonizing and it's boring. It's a pain in the ass, and there's one coin pumping a week and one NFT pumping a week, and that's all you get before this kind of reaccumulation and next cycle or some sort of bottom in equities, right? Obviously, the other scenarios suck because they involve 30K breaking, and if it breaks meaningfully, i.e. in a way that isn't some sort of deviation or failed breakdown, that's minus 20, 30, 40% on deck rather easily, I imagine. So best case scenario, continue this type of price action, really, kind of holding the highlighted red box here, monthly levels more or less staying intact, and if they do break, getting some sort of immediate reclaim or failed breakdown attempt, just like we've had a failed breakout. In the absence of that, if equities keep nuking completely, I have a 5% chance in my head that we decouple and moon as equities doom if that is the case, but my base case is that if equities really doom, we're not going anywhere without them. So that's just some quick monthly commentary. Where are we on the daily time frame? Well, as you'll recall, we're within this clumsy consolidation, kind of in no man's land. Again, maybe there's some monthly structure here, but it's nowhere near as good as the better defined levels. One way to view this consolidation would just be to, as we talked about last Monday, I believe, highlight the lowest close as support and highest close as resistance. That's kind of the mini range we're dealing with as part of this broader structure here. Now, what did we have to the upside? As you saw, the market tried to break. It's kind of the, this price action here is essentially a compressed version of this failed breakout, right? You've got a clear range set. The market tries to break above it, isn't accepted, and then dumps towards the range low, right? So if this consolidation is going to resolve positively, I mean, there is some structure here, as I said, monthly level and also just round number 40K, and the market really likes that type of stuff. So in the short term, what upside would look like is kind of the mirror image of what we've had at the range high, i.e. market tries to poke below the support, ends up closing above it, and then your target is the range high. That's it. That's the straightforward setup. And really, any trades in the absence or outside of these monthly areas that I really like are going to be very low holding period, low conviction setups. As I said, if the monthly is just printing and issuing very accurate signals, I see no reason to step in against that. But just some commentary on interim developments as price is within this consolidation. Otherwise, monthly levels, just waiting for those to come into play. And then if we get there to this 35, 37 or back to 43, 47, I'll kind of discuss my view on those and when those setups become more pertinent. But for the time being, intraday range low here with a bit of an early week spike below previous week's low. And if there's going to be further upside from the 40K handle, you essentially know what to look for, which is just like there was a failed breakout above 41, 42K, we want to see a failed breakdown below 39, 40K. So at least a decently compelling daily close back into the range would be welcome. Otherwise, most days, I'll be honest, more focused on other stuff. I'll open Twitter news and just to keep abreast of stuff, usual research, insights tab, and so on. But really, I kind of glance at this chart to figure out what's going on, and then maybe look at lower time frames if there's something spicy. On the ETH side of things, a monthly time frame is somewhat less instructive. I do think the weekly on ETH is decent, and just basic eye test. Even if we remove all of these squiggles, you can kind of see where the pivots converge, and that seems to be around the 3K level, right? We can even be slightly less generous with the zone and outline the main kind of candle body flipping points, all of which are around 3K, just above 3K. I didn't really like much in the form of this consolidation as far as higher low structures go. This is just a bit ugly for me. I like clear candle bodies and nice ranges. There isn't a ton here. So for me, the only thing that would make ETH look constructive would be, as you can imagine, trading back above and closing through this multi-pivot support line, now turn resistance, line make, buoying, technical analysis type of thing. It's kind of the best weekly level on the chart. The monthly time frame kind of sucks. The daily is meh. At the moment, we've had 2 weekly closes below it. Not great. Weekly close back above. I could see a push back towards the high, if not something deeper towards 4K. But for the time being, if someone just asks very casually, what do you think of ETH? I'd say 3K is a big level. It's currently resistance, and I'm not terribly interested while that is the case. And that 3K level is, if anything, more apparent on the daily time frame. So again, Bitcoin time frames, I think the best ones for the time being are the monthly and the daily, and the weekly sucks. I think the same applies. I think for ETH, it's the weekly and the daily that are good in terms of clear technical structures. If we look at this daily, right, the aforementioned 3K level, just market obviously really likes it. So similar to Bitcoin, what's in front of us is the market breaking below a key level. So ideally, at least for the upside, or in order to form some sort of bullish setup, you want to see the breakdown fail, so price not accepted below the range boundary. And generally, when it trades back within it, there's some sort of move to be had, at least to the other side of the range, if not higher. So if you know basic range trading, as we've discussed, whenever you have a boundary and the boundary breaks, you either get acceptance above the boundary, in which case the market's happy to accept those prices and it follows the direction of the break, or those prices above the range or below the range boundary aren't accepted and you get, acceptance back within it, or a deviation, failed breakout, failed breakdown, whatever you want to call it. Similar structure for ETH here, 3K on the weekly and daily time frame being the key level. If it's bullish, these prices won't be accepted and the market will be back within the range, and then there's some sort of punt to be had within this miserable consolidation. But definitely, the weekly time frame, you can kind of just eye test this rather blatant level, and it needs fixing for the time being. So if it keeps rallying, that's good, but that rally in the short term will be into resistance and needs to do a bit more to start to look constructive. That's really it. I'm not going to waste your time with more content. I think that's a rather comprehensive view of Bitcoin and ETH. Both of them are trying to form failed breakdown patterns, but for the time being, it's just kind of pokey, choppy, early week puke type of stuff. If it's going to be a green week or one that resolves to the upside, looking for daily time frame acceptance above range boundaries on both fronts. Overall, so that's low time frame commentary, but overall more zoomed out. BTC monthly is compelling, slightly lower from here, and ETH is compelling on a weekly back above 3K at the very least. Hope that's good enough. I haven't got anything else. I won't occupy any more of your time. Thank you to FTX for supporting Technical Roundup, best mobile trading app on the market. You can hide your portfolio on days like these and then turn it on when the market is super green. Very helpful. It's helped me cope, that and the alcohol. That's all for me. Like the video, subscribe, leave a comment. We do read them all. Thank you for your support, and I will see you for the newsletter tomorrow, trletter.com. And I'm sure Don's got entertaining holiday stories to tell you on Wednesday. Hedge funds around the world are selling volatility as the duck's gone on holiday again in this economy. Anyway, that's all. Enough rambling. Goodbye.